The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we wrapped up the week of trade on Friday, pretty tough, really risk off across grains and oilseeds, the livestock sector as well. Fairly quiet in the outside markets, but just not a great way to end the week and the month of February on Friday. Let's talk about it, get some perspective from Mike Miner with Professional Ag Marketing. He is in Laverne, Minnesota. Mike, it's great to have you back on Market Talk with us. How are you, buddy?
Very good. It's been a week, and I'm telling you what, we got a lot to talk about today, I think, Jesse.
We absolutely do. I'll just start it here, perspective-wise. Did I hit it on the head? Did it just feel like one thing after another, and it kind of capitulated on itself, and it just turned into a risk-off day to end the month of February, Mike?
Absolutely. I mean, if you look at the news that we were provided, tell me something we really didn't already know. Now, if you look at, we'll start on the ag outlook for them. 94 million acres of corn and 84 million acres of soybeans. We pretty much hit it nail on the head. I mean, those are expected numbers. Those numbers shouldn't even get traded anyways. I mean, that's just some dude guessing at the USDA, right? So the weight of that should be minimal. But it's a good excuse for us to finally say, here's your first excuse to look at next year's balance sheet. And one, that 94 plus, probably 95 million acres getting traded, not real bullish on the corn side. The next thing, tariffs, you go into that. We know that tariffs are going to be a thing with Trump. Just switching around some timelines, that scares. It's all uncertainty. And this week, I think we traded uncertainty, whether it was corn, soybeans today with the tariff announcement for retaliation out of China. You look at the lean hog market and then the timing of all of them and the ways they traded. Yeah, it was uncertainty, wasn't it?
Absolutely. I couldn't agree more. Well said. And you think about this too. You throw in just that typical end of the month position squaring, and you mentioned with USDA's ag outlook numbers, they shouldn't really be traded in the market, but it gives us an excuse. It gives the fund manager and the algo an excuse to trade. And I think that was really at play, especially in corn and maybe even some in soybeans and wheat on Friday. Mike, what do you think about that?
Yeah, and as the more on the protein side, but as you saw reports come out this week, like consumer confidence taking the biggest hit we've seen since 2021, that really gives them an excuse not to have to worry about inflation maybe quite as much, hedging against inflation. And when you're buying commodities to hedge against inflation, like corn and wheat or the protein markets, it gives them an excuse to say, you know what, we can pull back, we can take some risk off the table. And besides, uncertainty, tariffs, all of these things, I'm going to put my money in a safe haven like the US dollar, for example, or gold. And we've seen that over the last couple months pretty decently. And I think it's been money flow in a very big way when looking at just what fundamentals did for a lot of these commodities this week. There was no major change in a lot of them.
Well, let's talk about a few of these grain commodities individually. Let's start with the corn market. You look at old crop now, maize getting ready to really be the focus here. Already has been for many at kind of that 470 level, we'll call it. New crop back to that 450 level. I mean, when you look at this corn market and the charts and some of the fundamental moves and the technical picture here, do we risk some downside targets still? Are we maybe getting to a comfortable spot here? What do you think in corn, Mike?
So on corn, you've retraced about 49 cents off the May contract since last week's high. It was a very different end of the week last week than it is this week. And 49 cents is a big move in the corn market. And when I'm looking at the charts, for example, on May corn, the 100-day moving average is just about 6 cents lower or so from where we are today. So a pretty decent support area. I don't know if it'll quite stop it, However, we need something to get the bulls fed, right? We could probably stop it and go sideways, but what are we going to feed the market to say, I need to trade higher? And today, the only thing I really see at this point is weather or good trade news, some big sales because of the big drop, maybe some bargain buying, maybe ethanol grind really peaks out here because we've seen some improved margins here over the week. Some of those things, but there's nothing to say, let's rush in here from a fun money perspective. And whether it's, you look at new crop at 455 today on December, now the crop insurance price is going to be set. Up until today, it looked like you're getting a 471 average on corn and you're closing at 455. So if we continue down this path, your answer for crop insurance is going to probably become a lot more clear in the next 2 weeks if this trend continues. And at this point, we've taken off a lot. We're getting towards some support areas, only a few cents away. I'd like to see it kind of go sideways now for a little bit. Obviously, it's a choppy sideways if this continues, but that's kind of what I see on corn.
How about on the soybean side? And I just kind of noticed this as we were getting ready to go on the air here. There's not a lot of carry between, say, the May Nove bean spread. I mean, you're kind of 10-25 ish, I'll call it, on both. I find that interesting. Talk about some of those dynamics in the soybean complex right now, Mike.
Well, if you look at the ending stocks for this year, around 380 million bushels right now on the U.S. balance sheet. Going to next year, it's just slightly lower than that at 320, according to the Ag Outlook Forum, for example. That's not a heck of a lot of a big difference on the balance sheet. So, I mean, you're in a very similar position. The U.S. isn't really the problem, actually, when it comes to the U.S. balance sheet. It's mainly a global ending stock situation. We just have too many soybeans around the world, and Brazil is the big problem there. They've got a record crop. So when I look at the chart, there's not a whole lot stopping it at this point for support levels. The big one here, I think, is when I look at the last 24 hours, especially after the Ag Outlook Forum, soybeans are going to try to either stay sideways or stay put where they're at while corn goes down, or they're going to have to run up pretty aggressively to at least try to buy some acres at this point. So I don't know exactly what one's going to give or take here, but I'd like to see some appreciation out of that soybean market to at least try to make a battle going into the spring, Jesse.
Well, and thinking about that spring acreage, I'd love to know what you're hearing from clients of yours, folks around your neck of the woods here. And I'll throw out as well, USDA's price forecast from the Ag Outlook Forum: 420 for corn, $10 even for soybeans. I still have to think that at those price levels, and you mentioned the crop insurance piece as well, I still have to think that this overwhelmingly favors corn acres right now. We know that could change though with spring weather, et cetera, et cetera. I mean, your thoughts on that? What are you hearing from folks right now?
Well, from a rotation perspective, 2 years ago, we had 94.5 million corn acres. So if we do have 94 plus, I mean, that's not that big of a feat to try to get. Two, yeah, we're making money today planting corn and losing money planting soybeans. Well, up until this week, at least. Now it's a little bit tighter on the corn market, but it at least gives a little hope. So marketing strategies, it's easier planting corn and trying to get that to pencil out because you can at least try to make a profit or pretty close. Soybeans, you're losing $70 an acre, so give or take on your own situation. So that's a big difference when making that decision. The other thing with just the relationship between the two of them, I think right now, is just taste in the mouth of producers as well. Last year, dry finish, poor soybean crop. Corn was pretty good for a lot of producers. So it leaves a bad taste in their mouth year over year and just say, you know what, it's easier. We'll just plant corn anyways, and we'll go that route. So when I look at the acre situation, the corn probably a little light, soybeans probably a little bit too many, probably closer to 83 or 82. The wheat number I thought was too high. I think spring wheat acres could go down. There's not much incentive to plant spring wheat, and honestly, it doesn't look like the winter crops are doing well, at least with the little amount of cover they've had. So I would like some of the wheat acres to shift into something like corn. Cotton acres, they pretty much did it. That's a low enough number, maybe a little bit lower, but close enough. And I could see the corn number grow quite a bit, honestly, on the acres.
Mike Miner with Professional Ag Marketing joining us here today on Market Talk. You mentioned wheat a little bit. Just any other notes for you on this wheat complex before we get into livestock? Because I do want to talk to you about the hogs and the cattle. But you look at wheat. I mean, we've lost quite a bit here as well, kind of in conjunction with corn. It just feels like wheat and corn have kind of been moving together here as of late, Mike.
Wheat is one of my big underperformers for probably the last couple months. Honestly, we've dipped to levels that are incredibly supported, long term are very low. You look at Russian wheat prices closer to 250 now. Given our levels with where we're at fighting back to old lows, we're probably too cheap on the global market, especially if this war does somewhat get resolved. You know, we had an interesting day in the Oval Office for that anyways, which we could talk about. But honestly, at this point, the ruble will probably move a little higher, make Russia less competitive. They'll stop trying to fund their war by exporting wheat to the rest of the world at a discount. So I would like to see wheat become more competitive globally from the U.S. here. And I think that we're plenty low to do that. I think wheat's probably a little bit cheap today relative to some of these other commodities. And wheat actually has been one of the only commodities that we haven't fully covered up their short position yet. And that's been surprising. I thought this last rally we would try to get that covered, and it just couldn't pull it off. So this little setback right now that we've had this week, a little bit surprising in my point of view.
I want to circle back to the geopolitical side here. I think that'll be a good way for us to wrap everything here today. I want to go to the livestock trade, though, and I want to talk hogs first. And if you can give us as deep of a dive here as you want on this hog market, Mike, a lot of volatility here as of late. This week, we've seen plenty of it again. I mean, I'd have to think one thing for me is that the tariff concerns, of course, with Mexico being such a huge partner of the U.S. when it comes to pork at play. But I mean, you take a whole look at this hog complex. What stands out to you right now, Mike?
Well, good fundamentals for the most part. If you start just block and tackle here, did the hog market have a decent reason to make this sell off prior to this little run? And somewhat, but the fundamentals still look generally good. Honestly, at this point, it seems like it's a lot of spec trade. It seems like it's a lot of technical action. I didn't see anything fundamentally for this setback to occur in this big of fashion. So when I look at it, a lot of it has been trading tariffs, I think, and a lot of it has just been getting, back below that 100-day moving average on some of these hog contracts and towards the bottom end of the Bollinger Band. We broke through some very key support levels on old lows that we had, and then that just triggers more stops, and it just snowballed. And at this point, remember, they've got a massive long position in that lean hog market. So if they want to take risk off on something, that's a decent spot to really take some profits and take some risk off and maybe spill on and short it for a little bit. But when I look at the hog market, the thing that really stands out is good fundamentals still. You don't have any herd expansion going on in the United States, really the world at this point on pork. And from the demand side, we really haven't seen anything change too dramatically. We are seeing some cuts, maybe shift more towards spring type grilling weather rather than over the winter months. Now we're seeing some volatility and cutout because of that. But the belly market's been incredibly volatile from 180 to a 130, now all the way back up. So the cutout's been very hard to say. We were up $4 last night on cutout. Was that really a bonus? Well, it was all just bellies. So fundamentals look good. It's a tariff concern and uncertainty, and it's traded very closely with corn. And that makes me really say over the last 24 hours, it's been trading a lot of the same things as corn, which is trade news.
Very true. Very true. How about from the cattle perspective? Let's bring that in here. Some downward movement on Friday. Cash trade about $2 lower again this week in the north and south. It feels like some of the same things at play in cattle, but different dynamics. I know in that side of the protein complex versus hogs. I mean, what's your view on the cattle side right now, Mike?
Yeah, so I would think with cattle, we're starting to see demand slip. And maybe the idea of demand is just slipping and that's doing enough. Because, like I said earlier, consumer confidence that slipped, had a really rough week. Problems with just overall views of the economy and safety. And am I going to lose my job through the US government? Things like that have maybe
Mhm.
piled on a little bit to say, if that is the case, people at some point are going to get tired of spending a lot on beef, spending a lot on steak. And at this point, probably haven't seen that quite happen yet. So it's more of a fear of it. And choice has pulled back a little bit. Sure. So maybe that's starting to happen a little bit. But from a seasonal perspective, that's okay. We can kind of slip sideways here until the end of March. I want to start to see that thing move higher. I will get worried if we don't by then. Until then, kill is very small. The last 3 weeks are about as small as it gets from the last few years for perspective on total volume. The Packer is not aggressive. You saw futures actually rally this week, and the cash market still looks like it doesn't want to really give us anything. So basis is pretty tight actually compared to where we have been. So at this point, my big red flags to watch are if you keep seeing choice cut out, go down, and you continue to see our kills stay smaller, get smaller, that's going to be a problem for this market, and it's going to have a hard time getting over that in the long run.
If beef demand were to start softening more, I would tend to think that that would be supportive for pork demand, which in turn would be supportive for this hog market, kind of tying the two together. I mean, that's just where my brain would go initially. I mean, what are your thoughts on that? Could a pullback in cattle be supportive to hogs, Mike?
To an extent, on the way up, 300 plus cutout, at some point that should lift all boats, right?
Yeah.
I mean, chicken, pork, and sure, $90 to $100 cutouts, fantastic, but probably relative to where beef cutouts been, probably not quite enough. On the way down, it gets bad enough. Sure, people are going to start looking at pork loin instead of a steak, or pork chops. So it's just a cheaper alternative that does normally occur to have some higher demand, and we'll see what the timing and seasonality of looks like for that. But you are starting to see headlines mentioning things like that revolving around the pork industry today.
All right. I said I would come back to the geopolitical here. And, we've had plenty of outside market volatility to end the month. Gold has had a few big down days, including Friday. You mentioned the meeting in the White House between Trump and Ukraine's Zelensky that got heated. And there's so much, the tariff conversation and more. So, from a general risk management standpoint, how does a producer, grain, livestock, you name it, I think this can apply to everything. How do we manage risk with all of this volatility surrounding the markets right now, Mike?
Well, we need to look at volatility as a positive thing. This week, it's hard to look past the fact that April hogs were locked limit down on April, a majority of the day. That's a difficult thing to get past. However, volatility creates opportunity. You can adjust your positions accordingly. You still have opportunities for margin, for example, with further out contracts, with the slide back on inputs, for example, in the livestock markets. You saw that with feeder cattle rallying over the past couple trading sessions. They wanted to be stronger. So use this as an opportunity. Use volatility as an opportunity. Sometimes the hardest risk to manage is when the markets seem to do nothing. And at least when we're going up or down, it creates opportunities. So that's the first thing. The other thing is that we can use products like crop insurance to buy some time. We can use things as a risk management tool that can give us a little bit of patience when making a decision, especially for something like soybeans when we are in a negative margin position. So I would look, as we're wrapping up our crop insurance time frame here through the month of February, look how you can incorporate crop insurance with your marketing strategies and really use that to your advantage. And on the livestock side, at this point, cattle are still at an incredibly high level that there's a lot of capital tied up in that. So continue to look at strategies for taking risk off the table in the cattle industry, especially. So those are a few things. Outside marketplace, I'd like to see the dollar be about done going up. That hurt us, I think, more than what got credit this week as well. And keep an eye on some of the other, a lot of focus here on the tariffs have been between Mexico and Canada. I think some of the news about China's retaliatory promises here in the last 24 hours probably didn't help us out on this Friday either. So don't sleep on China, and still they buy a lot of stuff that we send them from the ag market anyways from the United States. So that would be my input on the outside markets.
Excellent conversation, Mike. If folks want to reach out to you and the team there at Professional Ag Marketing to take a look at their marketing plan, how can they get in touch with you, man?
Yeah, go to our website, professionalagmarketing.com. We've got a lot of cool new tools to help producers manage risk, and give us a call at 507-449-2030 or stop by here at Laverne, Minnesota.
Mike Miner, Professional Ag Marketing. I should ask, with the nice weather, do you got your golf clubs out and shined up yet?
I'm trying to. I think a simulator is all I'm going to get to this weekend at this point, but it's a little windy out there.
Well, hey, if the wind might correct your ball into the fairway, right?
I'm going to need it, especially this early in the season.
I would say that would do it for me anyway, for sure. Good to talk with you again, Mike.
Doesn't look like you're going anywhere better, though, Denver.
No, I'm headed to Denver. Yeah, I was going to say, I don't think I'm going to get to play any golf in Denver during Commodity Classic either, but maybe in a couple of weeks. We'll have to see. Yeah. Mike, always good to hear from you, man. Thanks for joining us on the show. Have a good one. We'll talk to you soon.
Thank you.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.